Hello, good morning, good afternoon, good day. Welcome to my weekly market roundup, 25th July 2020. If you can hear me and see my screen, please let me know using the YouTube live chat panel. There may be a delay between me showing the screen, sharing the screen, and it receiving the viewers. This is the first time I'm carrying out the market roundup in a YouTube live session. I apologize if there is any technical glitches. I am Sagar Nandi. I used to work in IT. I have retired now. I am swing trading stocks using the Q systems and techniques. You may contact me using my email ID tradingprofitably@gmail.com. This is my traders forum, my YouTube channel and twitter.com handle. I share regular live market and stock analysis on these channels. These are all open to the public and you are most welcome to make use of them. Demonstration disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. As usual, in this week's market roundup, I will look at oil and gold. Then I will look at all the 360 degrees angles, market, sectors, industries, and stocks to see if the market outlook is bullish or bearish and what is our preferred trading direction, and accordingly try to look for trading opportunities. These are the trading systems I use: Q Elite and Q Global for technical analysis. Q Elite runs on TradeStation, Q Global, Q Finder runs on MetaStock. I use Q Vital for stock fundamental and peer analysis, Q Edge for sector industry rotation analysis, and Q Index for market level index analysis. I use all these systems in full real-time mode. That was the last slide of my presentation. I'll now continue with the live system. Let's start with studying the commodities, starting with oil. I'm opening USO using Q Global. I'm going to use the default weekly, daily at a glance template. Weekly on the left and daily on the right. In the last two market roundups, I had mentioned that because the ETF USO is moving in an extremely narrow range in the daily chart, I am not going to take any trade until it can break out of this narrow range. My view is remaining the same. In the weekly chart, the bullish backdrop is remaining cyan, that is bullish. However, because of the very narrow range in daily, I am not willing to take any trade in USO right now. Let's now look at gold. Gold went up strongly this week. The weekly backdrop color and shape both are very bullish. Price is strongly supported by the weekly memory trendline support. Looking at that, every time price tried to touch the weekly memory support, you could try to buy the stock. You could probably buy it using real-time fine-tune chart. In the market roundup, Earlier I mentioned about the bearish headwind. That was a possible reversal signal. However, I had noted that because there were memory support lines, we were not going to short it. We were going to watch it if price could break below the memory support. That didn't happen. The memory support held and price went up strongly. Now it is far above the upper boundary line. Upper boundary line is here. It is too extended to the upside. You can see that from the stretch signal in the daily chart, and it is even extended in the weekly chart. Therefore, I am not going to buy gold right now. If you are holding gold, then you may continue to hold that. There is no reason to exit at all. That was my analysis of the two commodities. Let me now have a look at the USA market using the market ETFs. For that, I am going to use Q Elite running on TradeStation. Let's start with DIA. In the previous webinars, I had mentioned about the memory resistance in the weekly chart. The memory resistances work very well. In the last webinar, I mentioned that when price touched the memory resistance and came down from there, then you could switch to the fine-tune intraday chart to take very lucrative short trade in DIA. Now it has displayed a bearish shape candle. The backdrop candle color in the weekly chart is yellow, that is neutral. It looks like price may come down from here. That is what you can see if you look at the weekly chart. There is a memory resistance, bearish shape candle. It seems price will come down from here. However, when we look at the daily chart, we see price closed right on top of a memory support line. There are multiple direction lines, yellow and white lines nearby, and there is another memory support line nearby. That shows even if price tries to calm down, it is not going to drop suddenly. At least that is not expected. Nothing is certain, but it seems that DIA, even if it looks bearish somewhat, not, I shouldn't say bearish, it seems like it may come down little bit from this very high price level. But even if it tries that, it will have a lot of support in the daily chart. If you look at this area, then you will say that DIA is moving in a sideways range. And if you look at a longer term interval, then you will say it is in an uptrend. For me, I am primarily a short term trader. My view is that it is moving sideways. Therefore, I am ready to take a trade in either direction. However, when I combine weekly daily, I don't see any easy trade in DIA right now. Not using the swing trading techniques. Maybe using the day trading techniques, but not using the swing trading techniques. The other ETF that had the memory resistance line, that was IWM. I mentioned about that in previous few webinars. This week it tried to go up but sharply reversed. This picture is very similar to DIA. In the weekly, there is a memory resistance, bearish shape candle, neutral weekly candle color. It seems that price may come down from here. However, when you look at the daily chart, it again has support from the white and yellow direction line, and even more importantly, a memory trend line support. Similar to DIA, even if price tries to come down from here, it will have multiple supports. No clear trading view, preferred trading direction from this sideways movement in IWM in the daily chart here. What about SPY? SPY tried to go above the memory resistance 1 week ago. It closed above memory resistance 1 week ago, and this week it tried to go up further but closed with a bearish shape candle. Now we have two candles, one after another, one with long lower tail, one with long higher tail. When you see this pattern, you know there is more than usual indecision in the market. Market is not sure whether it will push price up or bring price down. In my view, if you see that price is coming below this memory resistance line, then you may be cautious. In the daily chart, the same view as in case of DIA and IWM, it is moving in a sideways range. If it comes down from here, there is a possibility of taking short-term trade because the next support line is some distance away. You might try that in SPY using real-time fine-tune chart if price drops next week, or you might try to short some fundamentally weak stock that is also giving a swing short signal. The weekly daily is similar to DIA and IWM. What about QQQ? This was the strongest. It is also very strong now. In the weekly, it is very bullish. If you look at a longer period, for the past 2 weeks, it is indecisive, both in color and in shape. However, in the daily, it is moving in a triangle pattern. There is a trend line support nearby. Unless the memory support can be broken, we probably don't have to worry about stock prices dropping much. That is my view of the market ETFs. The weekly for most of the ETFs is showing that price may come down. The daily is showing there are many supports. It may be better to wait and watch and see what happens next week before taking new swing trades. That is the view from the market level. What about the sector level? In the past several roundups, market roundups, I had shown using charts from QH that sectors were moving in up down fashion. Let me go through them again. This is a chart of week by week sector comparison. The green bars represent performance of 1 week ago and red bars performance of the current week. However, this is a chart from 4 weeks ago. That time the sectors turned from bullish positive to bearish negative. That was 4 weeks ago. 3 weeks ago it turned from bearish to bullish. 2 weeks ago it turned from bullish to bearish. One week ago from bearish to bullish. This is what I shared in the last market roundup. I shared the sequence and this was the final chart, and I mentioned looking at the up down move because previous week it turned from bearish to bullish. If the up down move continued, we would expect a down move in the current week. Is that what happened? Not really. Let's look at the chart from the current week. In the current week, it is a mixture. It is not clearly bearish. In fact, 6 of the sectors went up, 5 went down. You may say very balanced picture, neutral picture. Therefore, the up down move seems to not continue anymore. We expected a down sector picture if the up down move continued. Instead, we have a mixed picture. Therefore, we have to conclude from the sector level, it turned out to be more bullish than we expected, going by the past 4-5 weeks pattern. If you see some of the sectors, including energy, financials, consumer discretionary, they were strongly up. The green bars were positive 1 week ago, and they are also strongly up in the current week. If you used Q edge for sector rotation analysis in real time, you could identify that these sectors were going up 1 week ago itself, and then you could buy some fundamentally strong stocks. As the sectors went up strongly this week also, you could have significant profit in those trades. Which sector to avoid now and which sector to look for buying opportunity? Let's look that up from Q edge. This is Q edge, the real-time sector industry analysis tool. Let's first look at the overall picture. Over 5 days, if you see the advanced decline, the sectors are showing a mixed picture, industries are showing a mixed picture, all the stocks, the S&P 500 stocks are showing a mixed picture. This week is very balanced, neither bullish nor bearish, something that we already saw. But this is showing a different chart so that we can visualize it easily. That is the overall weekly picture. If you look at 2-day picture and then 1-day picture, then clearly it turned more bearish over the last 2 days for sectors, industries as well as stocks. On Friday, all the sectors went down, no sector went up. Let's drill down into the sectors. Over 5-day period, you can see energy, financials, consumer discretionary. These were the strongest. The weakest were real estate, healthcare, communications. If we are looking for short-term trading opportunity, then we may short by 1 day. And on Friday, all the sectors were down. Which ones were the weakest? Infotech, real estate, industrials. A mixed picture. If you see the last 4, Infotech is non-defensive. Real estate may be considered defensive. Industrials non-defensive. Healthcare defensive. Financials after that non-defensive again defensive. Utilities. Then non-defensive. Consumer discretionary. Then defensive. Consumer staples. And then all are non-defensive. If you look at the worst performers, there is a very mixed picture between defensive and non-defensive sectors. If you look at 1 day, that is Friday's performance. What about 5-day performance? Real estate is the worst performer, defensive. Then healthcare, defensive. Communication services can also be somewhat defensive. Industrials, and after that again utilities. So if you look at 5-day period, and that may be the appropriate interval to study sectors. Why I say that? The higher up we go into the 360 degrees analysis from stocks to industries to sectors to market level, we may study that level, the higher level, in a broader interval to avoid noise. So for sector and market, it is perfectly alright to look at the 5-day period to see the overall trend. The 1-day period may be too noisy. If we look at the 5-day period, then we see that the worst performers are generally the defensive sectors. The best performers are non-defensive sectors. However, we noted that over the last 2 days, the picture became more bearish. Where to look for buying opportunity now? It is not very easy. Why it is not very easy? Because we saw from the market ETFs, the weekly is telling it may come down, daily is telling there are many supports. If you look at the weekly, you may not want to buy stocks now. If you look at the daily, you may wait for it to hit a support and start to go up and then initiate a new buy. If you look at the daily, of course, you are not going to short any stock right now. So that's a time when you probably wait to see what happens. If you look at the overall sector picture, we saw 5-day period is very mixed. We can see that from here also. 6 sectors up, 5 sectors down. How to find trading opportunities now? The best thing to do is to probably not find any trading opportunity, but we may start to prepare for some. Where to prepare for trading opportunities? We may do it in many ways, many key ways. One way is to look at the insights that lists the best performing and worst performing stocks under various categories. Let's look at the best performing value stocks. This is as of Friday's market close. I'm going to open all those 10 best performing value stocks using Q Global, and I will see if I find any interesting Q trade setup. FFBC, this has a memory resistance nearby. That's why I'm not going to consider buying it. I'm going to close it. RUTH also has a memory resistance nearby. Not going to buy it. AN, AutoNation, it is very strong, but it is high up in the price level. In Q technique, I'm not going to chase it. The buying opportunity that I could have taken was here. When the bullish flow candle came in the daily chart in Q technique, that is a possible buy point, optimal buy point. Then there was another bullish flow candle here, but that was already close to the upper boundary line. The next one is already very much above the upper boundary line. So if I look back, the previous optimal buy point was here. Using Q technique, I'm not going to chase AN right now. It is of course looking very strong, but not at an optimal buy point. CRI, it gapped up on Friday, however closed lower with an indecisive shape candle. Next week, if it can go above Friday's high, then you may consider buying the stock. Before that, of course, you will carry out the complete 360 degrees analysis if you are following Q techniques. That is, you will confirm that the industry is strong and fundamentals are strong. Fundamental is strong, we know, because it is from the list of best performing value stocks, but it is not looking like the best opportunity. Let me see if I can find anything better. BLMN, this is looking better to me. I'll come back to that. FE, it went up strongly, but it went up strongly on Friday, but prior to that it had a sharp drop. The candle color is still red, flow color is red, so I'm not going to buy it now. RRD has a memory resistance nearby. I'm not going to buy it now. BJRI also has one memory resistance. Skip it. RRGB has a nice base formation. However, there is again a memory resistance. This memory resistance and support lines work very well like the other Q signals. If a resistance is there nearby, I'm not going to try to buy that stock. SGMS. This is looking interesting. Let me see if I can find any other stock. No. So out of those 10 best performing value stocks, I shortlisted 2 that has an attractive chart pattern on the daily charts. One is BLMN, one is SGMS. Let's look at both of them using the standard at a glance template. This is BLMN. We know that both of these stocks are value stocks because we got the stocks from best performing value stocks list. Here the weekly has a memory resistance nearby, that is around 12.5 price level. Currently the price is 11.5. So there is about $1 distance between Friday's close to the next memory resistance line in the weekly chart. That $1 is approximately 9% up move. Whereas if you look at the stop, the logical stop using the daily chart will probably be below these two memory support lines or below even the third memory support line. If you consider the third memory support line, then the stop is around $9. Entry price will be around 11.5. So the distance from entry price to stop loss is much more than the initial target that we may expect, because there is a memory resistance in the weekly chart. Looking at that, I don't find BLMN giving attractive reward risk opportunity. Nobody knows for sure, it may shoot up to the next memory resistance level, just as nobody knows whether it will come down sharply. So I make my decision based on realistic assumptions, and here I am not getting attractive reward risk ratio. Though the daily is looking good, the weekly is telling me the attractive reward risk ratio is not there, so I'm going to skip this. Let's look at SGMS. Here I have a better opportunity. In the daily, it broke out of the memory resistance. In weekly also it broke out of memory resistance. In both weekly and daily, it broke out of not one but two memory resistances. The weekly candle color is neutral but shape is bullish, and the daily color and shape both are bullish. It also went up with extreme bullish pressure on Friday, gave a bullish flow candle. The relative performance tilted up, meaning it was outperforming the market. It went up with very high volume. These are all bullish points, and it is allowing me to take an attractive reward risk ratio trade. That is why I may be willing to take a long position in SGMS. Whenever I am thinking of taking a trade in any stock, I always ask myself, what setup am I using? And in this case, the answer will be, it is a breakout trade setup, not a go with flow, not a headwind, not a bounce or box setup, but it is a breakout setup, a breakout from a range that is happening with bullish pressure and high volume. That is a valid breakout setup. We already know that the stock is fundamentally strong in terms of valuation. Let's do a complete peer analysis of the stock using Q Vital, and I will use SGMS as a root stock. It is in casino and gaming industry. Let's check out its industry strength or weakness. Here is Q Edge industry scorecard for casinos and gaming. It was weak earlier. You can see that from that magenta color, and on Friday, right on Friday, it became very strong. And if you look at the pace column that shows acceleration, on Friday it was the most accelerating industry. We have 147 industries for the USA market, and its acceleration score on Friday was 147. So this was the most accelerating industry. If you ran Q Edge in real time, then you could identify these strengths during the market hours, and you probably already took a long position in the stock. We know it is a value stock. Let's look at the entire scorecard using Q Vital again. Valuation is undervalued value stock, plus it has a short squeeze potential. If you look at the price performance 10 day to 1 day, it is steadily going up. All the numbers are positive. Next earnings is far away. Actually, it declared earnings, I think, on Friday itself, and the stock broke out of resistance on Friday. You might enter it on Friday, or there is no harm in trying to enter it on Monday also, skipping the exact earnings date. This is looking like an attractive 360 degrees trading opportunity, and I in fact shared it in Q Traders Forum. If we go to sagarnandi.com, that is the Traders Forum, then under my category Sagarnandi Stock Picks, I had shared this post, a beautiful breakout. That was on SGMS. I shared it on Friday during live market hours. I ran my analysis around 3 p.m. Eastern Standard Time. And you can see I could see the stock from best performing value stocks list at that time itself. The industry was strong, and I carried out the full 360 degrees analysis, and I shared the trade idea. When I shared it, if you notice, the weekly was cyan, and in the last 1 hour of the market the color changed little bit, however the shape remained bullish. Now we have yellow color in the weekly chart, but it is still looking bullish enough. That was one possible buying candidate that we could find, and this we found from Q Insight. The industry is very strong and strengthening at the same time. Let's now have a look at the market using Q Finder. What is Q Finder? You may know already. Q Finder are not one but two scans, bearish scan and bullish scan, that finds all the possible bullish and bearish Q signals. I run it on a list of more than 1000 stocks. I run it on this list. And we can visualize the data. Let's do that. Let's look at the weekly picture first. This is the weekly picture. Earlier we saw from market ETFs and from the sector level analysis that it was mixed, balanced picture. Here also we can see whether we look at all the signals, all the Q signals, all the strength signals, trend continuation signals, or reversal signals. The weekly picture is very balanced, neither bullish nor bearish, mixed. That was the same picture we saw from the sector level. We saw from the sector analysis that Thursday, Friday, the market weekend. Therefore, we expect Friday's Finder picture to be weaker than this weekly picture. Let's find that out. Indeed, that is true. The Q Finder daily picture, that is the Friday's picture, is clearly more bearish. Whether you look at all the signals or in terms of their strength, trend continuation or trend reversal, everything is looking decidedly bearish. Another way to look at the market breadth on Friday is using Q Elite intraday market breadth. Let's see what that market breadth is telling us, and you could observe this during market hours as I do. Here we have the Nasdaq and NYSE advanced decline and then up down volume, and then the tick charts. These may be considered as internals, what is going on under the hood. On Friday, the advance decline for Nasdaq started at around minus 600 and it could never go up. For NYSE also, it started negative, it could never go up. It weakened further. An up-down volume for both Nasdaq and NYSE steadily deteriorated. The weakness sharpened in the last few minutes of the market. This is a 10-minute chart. The internals are showing, you may say, much more weakness than we have seen in recent days. Whereas if you look at the ETFs themselves, QQQ and SPY, Nasdaq and S&P 500, you see that though QQQ started lower, it recovered and then moved sideways. SPY was always moving sideways. QQQ closed above early range high. SPY remained inside early range, closing inside the range as well. What we can infer from this picture? We can see that under the hood there was heavy selling both in Nasdaq and NYSE. However, the large cap stocks didn't go down much after the open. In fact, looking at QQQ, we know that large cap tech stocks must have gone up after initial weakness probably. So Friday's picture, though QQQ and SPY, these two pictures are neutral, when we look at the market breadth, then we know that it was decidedly more bearish. And that is the same conclusion that we arrived at from Q Finder picture for Friday and also of course the Q Edge picture from the home page. This picture. If you are a regular trader, then you will find the picture from Q Edge and Q Finder to be much more reliable than looking at only the market futures or market ETFs to decide whether the market is truly weak or strong. Let's now look at some of the mega cap stocks, the leading stocks in recent days. Apple, the FANG stocks plus Tesla and Microsoft. Apple was very strong. The backdrop weekly color was cyan all along for many months. 1 week ago, it gave an indecisive shape candle, and this week it has again one indecisive shape candle. The backdrop color changed from bullish to neutral. It's not bearish, but it's not as bullish as it was 2 weeks ago. On Friday, you can see it tried to go down and then recovered more. When studying QQQ, I mentioned that QQQ's recovery after initial down move was probably due to some of the large caps also recovering. We can see that recovery in Apple. Let's look at the other FANG stocks. Amazon, a similar picture in weekly, still very bullish in weekly, though last 2 weeks it deteriorated. In daily, we see support on Friday from memory support line and it recovered after initial drop. Google, very similar picture. Weekly is still bullish. Both weekly daily have memory support lines. Friday recovered after initial drop. Netflix, Friday recovered after initial drop, has memory support nearby. Weekly is near memory support. Tesla, Tesla had some weakness after earnings. I could trade Tesla as a day trade one day earlier. Friday it ended with a doji shaped candle. Tried to go down but recovered somewhat. Still closed much lower than Thursday's close, but still with a doji candle. We don't know where price will go from here. Weekly is still very bullish. When you look at this mega cap stocks charts, it doesn't tell that the market is going to drop sharply. They are still very bullish. When you look at the weekly, daily has support for most of them nearby, near Friday's close. Maybe not for Tesla, but for most of the other stocks, there is support in the daily chart. What about Facebook? We didn't see Facebook. Facebook also has support in daily as well as weekly. In my last webinar, I mentioned I took a short trade in Facebook somewhere here, and I also mentioned that if this memory support holds, then I'm going to exit my short trade. That was using short call vertical. I could exit it with a decent trade. I think I shared the result either on my forum or on my Twitter page. The mega caps are telling that the market will not find it easy to drop. The ETFs told the same thing. The sectors are showing a balanced picture. From all this analysis, and QFinder is also having balanced picture over weekly period, I am going to keep my market outlook same as before, bullish. My preferred trading direction I'm going to keep as neutral, meaning I don't know whether I will take more bullish trades or bearish trades next week. It meaning the market may move in either direction. If it goes up, I'm going to buy fundamentally strong stocks in strong industries that are giving buy setups similar to SGMS, and for shorting I may look for similar opposite stocks, that is weak fundamental, weak technicals, weak industry. But I don't know where I will take new trades next week. That is my conclusion regarding market outlook and preferred trading direction. Having said that, we found a bullish stock, possible buying opportunity in SGMS. Why don't I look for some bearish trade also, so that I can be ready with trades in both directions? That is my usual trading way. If I am not sure about which direction trades I am going to take, I try to prepare both directional trades, either long or short, and execute the direction where the market is going. To find possible short trades, I am going to use QFinder. From the home page, I can see that it was of course very bearish on Friday across all the categories. I see a large number of breakouts with go with flow signals. Large number of reversals also. Let me try to find some setup, and I didn't prepare for this session. I'll have to see if I can find any opportunity that is low risk and a 360 degrees opportunity. I'll try to find a setup that is a breakout plus has a bearish flow and also has a reversal candle. Breakout, flow, reversal. So I'm going to go to bearish tab, find all the breakouts, flag all the go with flow, flag all the reversals. I'm left with two stocks. Let me make sure I close all existing metastock charts. I can click the chart icon to open the two stocks in Q Global. This is RHI and the next stock was AMG. RHI, AMG, RHI. This is looking weak on Friday. However, as I mentioned earlier, I am not willing to trade against the trend lines. It broke one trend line on Friday. However, there is another memory trend line nearby. I'm not going to risk any short trade in this stock. So RHI, I exclude. Then I'm left with one stock, AMG. It is giving me a breakout setup because it broke out of one, if not both, the memory support lines. It has a bearish flow and it has a reversal candle, meaning price initially tried to go up and then sharply reversed. So this is looking more attractive for shorting AMG. Looking like that from the daily chart, but I am going to look at it using the weekly daily chart before I confirm the technical weakness. And yes, the weekly is also looking weak. Tried to go up, hit the memory resistance, could never go above that. The backdrop color changed from bullish cyan to yellow neutral to magenta, bearish, and this week's candle shape is also bearish. So the weekly and daily both are looking bearish. If you look at the relative performance, it is severely underperforming the market. Technically, it is looking weak and it is giving a low risk shorting opportunity. Stop loss is very narrow. Before deciding whether this is a shorting candidate, I would like to carry out 360 degrees analysis. That is, I'm going to look at its fundamentals and industry scores. AMG, let's start with Q Vital first. It is in asset management and custody banks industry. Let's look up the industry scorecard. When I click the cog icon, it will take me to Q Edge and I can see instantly from the scorecard color that it is weakening. I don't even have to read the scores, just from the color I know it is weakening relative to other industries. If I go to the industry percentage, then I know that it is not only relatively weaker but it is also declining. Therefore, the industry is allowing me to short. Technicals were already weak. What about its fundamental scores? Valuation is in the middle. Earnings growth is negative and decelerating. Past 2 years also had negative earnings growth. Therefore, it is giving me a shorting candidate in terms of fundamentals. If you look at the performance, price performance 10 day to 1 day, it is steadily going down. All the numbers are negative, exactly opposite of what we saw in SGMS, where I found a buying opportunity. And you can see large number of stocks in its industry. 90% of the 62 stocks went up, sorry, not went up, went down. Red color is bearish. 90% of the 62 peer stocks of this stock AMG went down on Friday. Means not only this stock is weak, there are many other down stocks. However, we already found AMG as a possible 360 degree shorting candidate. Could we find another shorting candidate in the same industry? Why I am saying that, because I see a large number of stocks went down on Friday. We may go to the peer analysis. Look at the vital scorecard for all the stocks, and these are all those 62 stocks, AMG's peers. If I am going to look for shorting candidates, I may apply this smart filter 3 star, which is going to give me all stocks that are overvalued and with negative earnings growth. It gave me 2 stocks, both of them went down on Friday. Let's check it up. Therefore, their industry is weak, we already know. Fundamentals weak, already know. Technicals, we have to check AL and APO. Let's check that out. AL. No, I typed the wrong symbol. AL. This is looking weak also in the weekly chart. In the daily chart, the optimal shorting point was here when we had the bearish flow candle. That would be a go with flow short trade setup that came 1, 2, 3, 4, 5 days ago. We already have significant profit in the trade. In Q technique, I don't like to chase a stock because we are regular traders, we are analyzing the stocks every day. We would have identified this short setup 5 days ago. I'm not going to chase it now. I'm looking for optimal shorting point. It is bearish, but the optimal shorting point passed 5 days ago. AL was one stock I found. The other one was APO. Let's look at APO. APO has memory support line in the daily chart. If this support is broken, I think it is going to give attractive shorting opportunity because it is at price extreme high. It had a reversal candle 2 days ago. It had a bear release. A bearish headwind came at this level from where price came down. Price tried to recover, could not go to that watermark or this previous watermark level. If this daily memory and the weekly memory support levels break, then it will give a shorting the top opportunity. You may keep an eye for that. Right now, there is no trade setup in these two stocks. What am I going to do? I'm going to go to Q Vital. These two stocks are very weak fundamentally in terms of both valuation and earnings growth. Industry is weak, we already know. We came here from weak industry, but technically we don't have any optimal short point. I'm going to delete these two stocks. And when you delete it from QH, QVital, QIndex, this is QVital, but all of these systems based on Reuters or Refinitiv data, you delete it means you are deleting it in the view, what you are viewing. In memory cache, all the stocks, all the peer stocks are still there and they are getting updated in real time. I'm not going to refresh from cache. Instead, I'm going to reduce my constraint. Last time I looked for the 3-star shorting candidates. Now I'm going to click on 1-star. I didn't need to click the reset button. I just click 1-star and that gave me all the stocks that are weak either in terms of valuation, that is undervalued. Valuation here is in magenta color, or stocks that are having negative earnings growth or condition. Let's see which of them went down on Friday. Several of them. Let me look at the ones that went down by more than 1%, and I'm going to click the chart icon to open all of them. I'll go through them one by one. If I see something interesting, I'll stop. This is too much down in the pattern, not interested. PZN has memory support nearby, not interested. Again, memory trend line support. This is SAR, Saratoga, not interested. ARES. This tried to go below the memory support but closed right above it. Because it closed right above memory support, I'm not interested to short it. This one too down in the price pattern, not interested in shorting it. This one has memory support also nearby, not going to short it. Memory support nearby. No Q short setup, though it dropped on Friday. SCU, memory support nearby, so we didn't find any stock. Sometimes when you run a PR analysis on a stock that is looking weak, in this case we ran PR analysis on AMG as root stock. AMG as root stock. AMG itself is giving a short candidate. If we look at it again, the weekly daily, both are looking weak. It is giving a low risk shorting candidate in terms of technicals. Fundamentals are weak. Earnings growth is negative and the industry is very weak. We already saw that from QH. This is the industry. Sometimes you may find not only one stock to short from an industry, AMG in this case, but also some other stocks from the peer analysis. That's why it is always a good idea to spend few more minutes. If I was not talking for the purpose of this webinar, I could finish my exercise by few simple clicks in less than a minute or two, maybe 2-3 minutes. So it's always worth spending that extra time, look at the visual cues to see if maybe you sometimes have a better shorting candidate than AMG. And once you have done this exercise, you didn't find anything other than AMG, but that served the purpose. What purpose? Knowing that you have done your homework. Now, if market goes down, you are ready with a shorting candidate in a weak industry, weak fundamental, weak technical stock. And SGMS, we saw a stock in strong industry, strong fundamentals, strong technicals. Okay, let's look at EFX. Hi, Mike. Let's look at EFX. Let's carry out its fundamental analysis first, and I will make sure what is the symbol for Reuters. It is EFX, Equifax. EFX. This is looking weak. This is looking very weak. Very nice, very nice. I will point out several weakness, and thanks Mike for sharing this. The weekly is looking very weak in terms of color, in terms of shape. Very, very long upper tail. However, this is telling it's likely price will go down. If next week it can go below this week's low, that will be a very bearish picture. On Friday, price dropped sharply. On Thursday itself, it had a bearish shape candle. It tried to go above the watermark resistance and reversed on Thursday. Friday, it gave a bear release signal, bearish flow, very bearish shape candle. It had extreme bearish pressure, and if you notice carefully, it was at price extreme high, green color. Still it is green color, but from bright green it changed to dark green. That means if you ran the scan price extreme high and coming down, you could identify this stock during market hours. You didn't have to wait till market close. And now let me go to TradeStation and see that if we ran the scan and found EFX during market hours, could we take a short trade using intraday charts? And now I am looking at EFX using Q fine tune. That is the real time intraday chart. I use it for day trading sometimes and sometimes for precision entry of swing trading. In the morning hours, I am going to use 5-minute interval. I change to 5-minute interval here. Price opened here at the blue pivot level in the fine tune chart, which was very close to previous day's close, that is magenta pivot. Soon after that, early range high, early range low, the cyan color pivots formed. When it went below early range low, that was my point to take the short trade. My initial stop would be just above early range high, and once price came down to cover more than risk distance, in this case much more than risk distance, I could take some profit of the table and see how the charts end at the end of the day. And at the end of the day, both the weekly, daily charts and backdrop flow color, everything looked bearish. Therefore, I would be happy to continue to hold partial position. Why did I go into that much detail? Because on Friday, it dropped sharply. And on Thursday, it had an upper tail. Both are bearish. However, right now, if I try to short it on Monday, for my liking, the stop will be little bit far away. Can I still short it? Yes, I am happy to short it, but I am not going to probably short it using stocks. I may use a vertical. Verticals don't need any stop loss. They have inherent stop loss because of the two legs. So even if it goes up, spend some time there above the watermark resistance and then comes down again, I will still have profit in the vertical. I will not get stopped out. So if I see a pattern where it is looking bearish, but using stock, the stop loss will be far away. I may try to trade it using options, provided options are liquid enough. I didn't look at its fundamentals and industry. Let's check that out. EFX fundamentals weak enough. Instantly we know from the color coding. We don't need weakness both in terms of earnings growth and valuation. Valuation is overvalued. Earnings growth is not that great. It is positive. It came down positive but decelerating, you may say. And see the weakness in industry. 72% of the 36 peer stocks went down on Friday. That we know is saying in absolute terms the industry was very weak. The research and consulting services industry was very weak on Friday. What about its relative strength? Relative strength we can find out from QH. Relative strength is also getting weaker from cyan to magenta. And the industry percentage, we know that it would be negative because a large number of stocks in the industry went down. So this is how I might consider taking a short trade. And let me contrast what I just described. What did I describe? That if I ran my scan, what is the scan I mentioned? If I go to Explorer, and you may have some way of running that in Q Elite also, but the Q scans, trade station scans don't run on real-time candle. We have to wait for the candle to end. But there may be other ways of identifying this stock. But in Q Global, if you run this scan at price extreme, high and reversing during market hours, you would find this stock. Then you might try to take the short using fine-tune chart and hold on to partial position. Contrast that with IWM. In the last webinar, I mentioned that whether it was DJI or IWM or any other instrument, if the instrument is reversing from memory resistance line in weekly or daily, in this case weekly, then you might switch to intraday chart to try to take very low risk short trade. Remember, when we are using fine-tune chart, our risk is on 5-minute interval bars, whereas if we have profit, we may hold it overnight. So our profit will be in daily interval. That gives very attractive reward risk ratio. On Friday, I was watching QH homepage and the breadth was bearish throughout the day. When the market breadth is very bearish, as seen from QH, it usually tends to indicate IWM is weak because IWM has a large number of stocks, small caps, but it's large number of stocks. Then I looked at market breadth on Friday using Q Elite, and I showed that though QQQ recovered, SPY was moving sideways, large number of stocks were actually pretty sharply going down. That made a case for shorting IWM. Then I always keep an eye on the ETFs itself, and I saw that DIA was also weak, of course. DIA tried to go up and reverse, same as IWM. Because market breadth was weak, I was more happy to take a short in IWM. And remember one more thing, IWM was just reversing from the memory resistance in weekly, whereas in DIA it happened one day earlier, 1 or 2 days earlier. I showed that in the previous webinar. So I was going to short IWM and I shorted it here. I shorted it using short call vertical. I shorted when price was just above 147. So I shorted sell 147 call, and I don't remember, sell 150 by 150 or something, somewhere here. Then price dropped, tried to recover, dropped again. At the close of the day, and this is why I am coming to this example, at the close of the day, I had to decide whether to book full profit or hold on to partial profit. And this is where the difference lies between EFX and IWM. This is IWM. It has support nearby. Yellow, white direction line, memory support line. The weekly is still yellow, whereas EFX is very bearish, both in weekly and daily. So if I could take the trade earlier in EFX, by the end of the day, I could book partial profit and I could decide to hold partial position. In case of IWM, I decided to book full profit because the daily weekly was not allowing me to hold on to the trade. That is how, using very different angles, be it from Q Finder daily, Q Finder weekly for a step back loop, the weekly daily at a glance template, certainly using Q Edge, the home page statistics, you can decide accurately what to do. And I tend to be ready with trades in both possible directions, like in this week, SGMS and SGMS for long side, and we found the, not this stock, we found AMG on the short side. You may be prepared with more such trades before the market opens. This is the first week I'm trying this live session for weekly market roundup. The more interactive it is, the more beneficial it is going to be for everybody. We are already at the 1 hour mark, so I'm going to end today's session here. Thank you very much for attending. I look forward to seeing you in my next session. Have a great week and trade profitably. As I tend to say, there is absolutely no reason not to do so. Thank you again. Take care. Bye bye. Keep safe.